Good evening, everyone, and welcome to another forward-looking technical analysis for GameStop for the week of 8/23. The first thing I want to go over is our previous week's prediction, what went right, what went wrong, and how we're going to adjust for that moving forward with this week. The first thing that you'll notice is the positive uptrend, which did not occur right here. The reason being, I had assumed that we would trade around 8 million volume this week. We, in fact, traded 6.4. On the day when we should have broken out to the upside, which was Thursday, there was actually a market correction. A slight one, but a correction nonetheless. And that actually brought us below our long-term trend line. We did have a bounce off of this low support here, but unfortunately, not too strong of a one, and ended up coming within about 80 cents of our predicted price range, ultimately following this neutral trend for the week. So this did pan out. Not the price action we wanted to see, but at least the price action we had predicted. So moving forward this week, what I'm going to do is I'm going to reduce the volume a little bit on the predicted price action to bring it more within that range. Moving into this week, we're going to have a possible double bottom bounce here on the daily chart, as we have hit the same low twice on this low support. These have about a 78.5% chance of bouncing to the upside. That upside bounce can be confirmed with a bullish divergence on the RSI, which we'll look at in a minute. We have a possible high trend marked there at around 225, a possible low trend hitting the mid 190s, maybe testing 200 by the end of the week. Those trends are identical, except in the fact that I have reduced the volume for the low trend by about 20% in order to factor in this kind of really illiquid low volume activity we've been seeing lately. I do expect volume to come in this week. I'm just not sure how strong, so I figured it would be better to map both trends so we have an idea of where we could go. Right here, you can see our possible dip range. These will be for intraday dips. If you're looking for a dip buy opportunity, it will probably fall within this range. Next up, we're going to take a look at RSI 6 and 14 on the daily. Here is our bullish divergence line to confirm that double bounce. If we see some positive price action on Monday, we'll have confirmed that bullish divergence. Here are our two bottoms. And this is Thursday's dip followed by Friday's pretty strong bounce. We actually didn't even go into oversold, so it's looking positive for the coming week. Next up, I want to take a look at our RSI, our MACD. Here you can see that we have had both false signals play out perfectly. We've crossed over into this uptrend, the same as before, and now we see this small divot here and here on the price action, showing a little bit of convergence before we make that big move to the upside. So everything looks in order there. And just to confirm that we're going to be continuing up in the trend on the MACD, we'll go over to the 4-hour, which you can see here, and you can see that we've had a crossover, bullish crossover on the 4-hour, and that's getting ready to move into its uptrend also, which we'll see play out further on the 1-day chart. This is our stochastic RSI. We had previously predicted that we would see a little bit of consolidation occur before we crossed back over and began that trend up into overbought. This happened previously back here. The low volume actually gave us a crossover, which we didn't have last time, but we did cross back over. So this is just a small false signal. And now I expect we will start to move into the rest of this previous trend here. Then we'll take a look at BBKC and TTM squeeze. BBC broke out here, and I expected us to have a bit of movement to the upside. But as you can see, the Bollingers have actually tracked really tightly with the Keltner channel. It's just that this indicator, this is like a custom script for BBKC, isn't really doesn't really have a lot of tolerance. So the Bollinger Bands still technically haven't fired. And so this is still a fire signal through here. As you can see on TTM, it looks like we're going to have one more day of consolidation. And then I think Monday or Tuesday, we could expect to see a lot of volume and volatility kind of flow into the stock as we move to the upside and the TTM squeeze fires. So the last thing that I wanted to point out, which is kind of new for this week, is I want to take a look at our historic price action. Up until this point, I haven't really felt that we had enough data since the run-up in January to start using previous trends to confirm current ones. However, I feel we are reaching a point where that's no longer the case. And so from here moving forward, most likely, I will be using some of our historic price information to determine kind of the trends and patterns that we'll see playing out on the stock moving forward. And while I'm nearly certain of the cause and effect behind these patterns, I still need more time to confirm the truth behind that. I, however, do feel comfortable pointing this out. As you can see here, before a run up in June, we had 3 flash crashes. These were attempts to drive the price of the stock down and break this descending wedge to the downside, causing panic and people to sell. Ultimately, we did bounce off that trend line, moved up and moved out of that downward trend into our run up in January. And we're seeing that same pattern play out here. There were 3 attempts made to bring the price of the stock down below the long-term trend. Ultimately, they failed, and we are now reaching a point at which we are ready to move to the upside again. There's 3 reasons I think that this is playing out a little bit differently than last time, but I think it's also very apparent. A, there are cyclical events that affect GameStop. What they are and the nature of them, the cause of them, the mechanics of them, I can't really go into yet, but suffice to say they no longer have the same ability to suppress the price due to short inflation, people no longer setting stop losses or selling, and this continuous trickle of retail buy pressure. Their ability to manipulate the stock to the downside has fallen off greatly. And so I think we are about to enter that run up to our previous high at 350 and a test at that level in the coming weeks. So based on everything we saw here today, GameStop is looking really good for this week. We'll either be seeing some movement up to the 185 or possibly even the 225 range. And don't forget that because of our low liquidity and our wide bid ask spread, that we may not need the same amount of volume to see those prices, as the stock moves much faster on much lower volume than it did in previous run-ups. And then lastly, I wanted to just go over the market real quick. We had some bearish divergence on the market on Thursday, entering the correction zone. So what I did is I went back and I updated that long-term trend, as I feel like enough time has passed since that big correction that we can start to look at the SPY forming this new slightly lower trend, which conveniently on Thursday we broke down from, giving us an indicator for our correction zones. It has yet to reascend into that long-term trend, but it looks like it's going to, based on Friday's bounce. We'll see what comes Monday. Currently, though, it is on a bearish divergence. We have Delta variant cases coming in real quick. The Treasury's not looking great. But on the flip side of that, we have Congress coming back into session tomorrow. And one of their first orders of business is Biden's $1 trillion infrastructure plan. If that passes without too much, political rigmarole, we could see that bearish sentiment that has carried the SPY since the COVID crash last March rush back in full force as industrials and businesses that benefit from the infrastructure plan start to have a much more positive outlook. And then lastly, we'll take a look at the Shiller PE ratio. I always look at this every week. It's down 23 points from last week, mostly due to that correction on Thursday. However, this coming week, I expect if the SPY goes up, we will see that value continue to ascend towards those all-time highs that we have not seen since the dot-com bubble. So all in all, 50-50 on the market, I would say. It could really go either way. I will be continuing to pay attention to those correction zones and looking for a dip to the downside. Thank you all so very much for tuning in. I will see you bright and early tomorrow morning for the live stream at Market Open. If you could, please drop a like and a subscribe. It's a huge help to the channel and a great way to show your support. Thank you all so much, and have a lovely Sunday night.